Dude, how do I start this shit? What is good, everybody? It's your boy, Elliott Waves guy. I'm younger than people think. So obviously you guys know me from Reddit. You know the Elliott wave analysis that I post, and so what I'm gonna be doing today is we're just gonna be jumping right into it. I'm gonna put up my computer screen and I'm gonna be running you guys through a few different Elliott wave counts that I have for the S&P 500, and I'm gonna be analyzing GameStop as well because a lot of people are hyped up for this weekend. I am too, but I also like to, I think manage my expectations is the wrong way to put it. I'm just preparing for the best while expecting the worst. That's kind of the way I've been looking at this since day one. Let's just jump right into it. I'm assuming you guys have watched my recent video where I go over how the targets work, how you connect the Fibonacci levels to arrive at your different targets. If you missed that, I encourage you guys to check out the previous video, just because it'll make this analysis make a lot more sense. But yeah, without further ado, let's jump into the waves, shall we? Okay, so I actually filmed a video a week ago, but I decided I didn't want to upload it. I don't know, I didn't really like the way it flowed. But what I'm going to be doing today, as I stated earlier, I'm just going to be going over a few possible Elliott wave counts for the S&P 500. Let's get rid of this. Actually, no, it's fine. Now, I don't have all of it labeled. It's doing it on Thinkorswim's a pain in the ass, because unlike other trading platforms, I actually have to go into the annotation tool and do it one by one. You know, it's a pain, but you know, we'll survive. I think we'll be just fine. The question that everyone's asking me, you know, when is the top of the market? When are we gonna start to decline? So here's my take on it, right? I'm just gonna jump into a new one, just because it's less confusing to look at, I feel like. So obviously, right, first of all, on a bigger scale, let's just just draw some lines, right? So we have 1, 2, 3, 4, and this is our fifth wave right here. So we're gonna go from the low of 1 to the high of 3, down to 4. And remember, these are just levels worth keeping an eye on, just because we are in the largest scale possible. These targets give us a general idea, and then we go on to smaller time frames, because remember, Elliott waves is a fractal trading strategy, which means we're basically deriving our targets from different movements within a cycle, right? So actually, I'm just gonna pull up my other account again. I say other account, but this is the only one I have on here. So there are a few ways of looking at this, right? I think I've said before, I'm eyeing 436 as a really important level to keep an eye on. And I'm gonna show you why I believe that to be the case. So, go into a 4 hour, right? I'm sorry, this is all over the place, but oh my god, I'm sorry. This is so confusing to look at, even for me. Trying to explain this is kind of hard. But let's just go from here, right? So one way of looking at it is if we're starting a 5-wave impulse, and remember we are in an overarching wave 5. You know, this is going back from the end of the financial crisis of 2008. You know, housing market crash. So what I'm gonna be doing is, you know what? Scratch that. I'm gonna just go from here, because it's easier if you guys can see what I'm doing in real time. And so the count that I've been eyeing specifically is from the GameStop sneeze back in January, right? Now GameStop went from $40 to $480 in the span of a few days, and the market dropped. It dropped a lot. And so this was that time period right here, right? It went from 385 to 368. That's a almost 30-point drop in the matter of what, 2 or 3 days, which it caught a lot of people off guard. I was excited to see it because it further supported the argument of, you know, GameStop is just a big black hole that sucks the market down with it, which it's a cynical way to look at it. But using that, right? So we go. I'm just gonna label it in for you guys so you can see what I'm talking about, right? So if we have this as our wave 0, then we have 1 and 2, 3, 4, and 5 would probably be somewhere around here, just from eyeballing it, right? And so the way we can arrive at our precise targets, assuming you watched my previous video. First of all, to verify this is a wave 1, just from eyeballing it, we can tell that it does, you know, meet the criteria, that it retraces deep, because remember, wave 2 usually is the deeper retrace of the 4. It's just how it usually goes. And so what we can do is we'll take fib levels from the low to the high, and you can see right there, we actually hit the 85.4 level, which, you can see we tapped it barely just right here. But this, because we bounced there and we started to recover, this validates a wave 2. And if we wanted to like dig a lot deeper, we could actually see that this was a corrective structure. I'm not going to go too deep into that in this video. Maybe in a different analysis I can show you like the different kinds of corrections, because you have your zigzag, which is ABC, then you have flat corrections. So you have something called a running flap, expanded flats. It gets kind of confusing. What was I saying? Right, but to get our, let's just analyze a bit deeper, right? So we take our extension from low of 1 to the high of 1 down to low of 2, and this isn't like a perfect matchup, but if we go like even deeper, we could see, right? So typically the extension that we see as the most common in a wave 3 is a 1-6-1-8 to 1 extension of wave 1. So we're looking usually for this level here to be hit. So anyways, if we were to dig a little bit deeper, we could have seen that, okay, we rejected here, but based on what's going on after this level was hit, we can conclude that there actually was a little bit of upside left in the move. I'm not going to dig too deep into that here, but so using that, we have our 3, and we'll take our retracements, go from here, from low of 2 to the high of 3, and look, there's your 38.2 right there. And so I remember what I was saying, because if your wave 2 is deep, we can expect our 4 to be less intense, and naturally that's what happened. So we had the 78.6, or no, we actually had the 85.4 level hit here, right? We can see the blue level on the bottom was hit here, and so because that happened, we could have concluded, okay, a shallower correction for our 4 is anticipated, and lo and behold, that's exactly what we got. But finally, now that we see all of that checks out, we're gonna go to our extension tool, and to see our wave 5, wave 5 is usually a 0.618 to 0.786 extension of your waves 1 to 3 minus your 4. And so to do that, a little bit confusing, I'm sorry, but low of 0 to the high of 3, and bring it down to 4, right? And this will give us our targets. And in one of my, in like my update post, I think I was saying how I expected like 436 to be hit, and you can see where that number comes from right here. But remember, this is like the 5th of a 5th of a 5th of a 5th, and so you know what happens at the end of a wave 5, right? If you said correction, you are correct. But yeah, zooming out again, I like the 3 years. So right here are the levels that like I'm watching on a small-ish time frame. This is spanning out over the course of a few months, from the low, the S&P 500 low of when GameStop did its little sneeze in January, right? So that's where we are now. That's what I see is going on. I could dig a little bit deeper into what I think is going on, but you get the idea. But as for what this means for the general market, I mean, I guess we'll have to see. I'm really curious to see how SPY reacts to the 436 level, because that is obviously that's a point of rejection that I'm watching for to conclude the move. If we do blow past it, and like, I'm saying like really blow past it, like let's say we're looking, yeah, same chart, right? Like let's say we completely obliterate this target here, and this one here too at 446. I mean, we'd have to come back and reevaluate. But based off of what I see now, this count has been correct. Like the retracements that I've shown you have literally hit to the T. And so usually like when that happens, I'm more inclined to believe that the count that I'm looking at is correct. But yeah, no, that's where I stand with the S&P 500 for now. I'm slowly going to be averaging into, aside from GameStop, I mean, my portfolio is like majority, if not entirely GameStop, but like I have a tiny bit of money that I'm allocating into other positions just so I can slowly trim those as GameStop starts to rise and like add into more GameStop. I don't know. I'm playing this situation like a degenerate, but I have nothing to lose. I have literally nothing to lose and everything to gain. So I'm gonna be as greedy as I can to try and squeeze the most out of what's going on. But yeah, these are the levels I'm watching for rejection going into this week. Okay, but moving on to GameStop, right? Everyone's favorite. Let's go to like a dumbed down count. Yeah, this is easier to look at. Let me remove these. But yeah, WXY correction is, you know, remember how I was saying earlier, there's like different types of correction patterns we'll see. I can go into that in another video if you guys would like. Let me know if you would like that. But basically, my primary count for GameStop right now, which, you know, based on like all the other DD that I've seen, I'm inclined to believe this is correct. But this is actually like an incredibly crazy fucking bullish pattern. I don't think I've ever seen a setup quite like this before. I fucking wish I did. I would have made bank on those and put it into the GameStop. But this is something called a 1-2-1-2, but it's actually a 1-2-1-2-1-2. Basically the same as like saying, oh, we're anticipating a third of a third of a third of a third, you know, so on and so forth. So 1-2-1-2 is, I'm just gonna draw it so you can visualize, right? So like, let's say we have our, you know, you have a 1 and a 2, but then on a smaller scale, you have a 1 and a 2. But the overarching is, right, you know, 3 is gonna look something like that. But, you know, so let's say to finish the pattern, it would look, I don't know, something like that. You know, that's just for visualization purposes. But basically what I want you to take away from the 1-2-1-2 is buying at the bottom of the 2 is, you know, you're setting yourself up for an amazing trade. This is definitely my favorite setup to trade. This is, you know, buying at the low of a 1-2-1-2 is, you know, obviously you're anticipating the third wave to commence, but it's like the low of the move, if that makes sense, right? Because in this scenario, we have our 1-2 from here to here, so that's a 1, or we have a 1 to 2, right? But then in this move, that was our 1, and this is our 2 coming down to here. And so I guess first of all, like in terms of like more downside, like it's possible that we see like a low down to like 165, but I like, let's just like pull up indicators real quick and we can confirm our bias even more. I don't know. I don't really think we have more downside from here, if I'm being honest. Like even my algo just said to long here. No, blue signals are view up signals, and yellow and white is like engulfing signals, like candlestick patterns basically. You know, I just like use that like supplementary to what I'm looking at, but like let's just like take a look at traditional indicators, right? Let's go into the daily. So TTM squeeze, basically all you need to know, light blue is bullish, yellow is bullish, dark blue is bearish, and red is bearish. So we can see here that TTM squeeze on a daily time frame is showing that we are starting to reclaim our bullish momentum. As for the MACD, you know, if we look through like historically, I'm assuming everyone knows this indicator by now, but basically when the short-term moving average crosses over the long-term moving average, in this case the blue being the short and the yellow being the long, when you have that crossover, that's considered a golden cross, which is a bullish trend because I believe I have the 12 and 26 moving average on here, but it's basically saying the trend is bullish. It's all you need to really know. And as you can see, we haven't crossed quite yet, but when we do, we can expect a bit of a boost from like, be it technical traders love this type of stuff. Algorithms pick up on it. That's, you know, how most algorithms are programmed. If you look on a 1 hour here, you know, that doesn't really mean anything to us, but yeah. Okay, taking away the indicators, let's talk about like future projections, right? So, see, first of all, another reason why I'm inclined to think that this, that our low of like 177 is the supposed bottom of this move is if we go from the start to the finish of this move, you can see the fib lows that come out, and would you look where we bounced? In this scenario, we don't have a lot more downside either. I could care less, but based off of previous trends, in this scenario the 786 was hit. In this scenario, 786 wasn't quite hit, so if anything, that's like even more in favor that we're due for a reversal here, especially considering how, you know, GameStop moves in cycles, your FTD cycles, which are like the main driving force in what moves the stock price erratically as it does. But okay, now let's talk projections. So super lightly, you know, if we're looking at this wave here, first of all, let's just get rid of the lower targets because we want more than that. So ideally, like even in this scenario alone, like if we're looking at this as 1, 2, 3, this 3 should hit, you know, $600+, but we're not looking at that quite yet. What we're looking at is this move. So we have our 1 and 2, and so if we put that down, this puts our wave 3. Ideally, we would like to see this level come out to 546. Will we see that, you know, this week? No one can say for sure. But what else? The other thing that's interesting to do is if we take our Fibonacci time extensions, if we actually go from the low to the high, or I'm sorry, from the beginning to the end of this wave that we were looking at, what we can use with Fibonacci time extensions is we can actually use these fib levels to try and determine the end of a corrective / impulsive phase. I don't really use it too often. I mainly use it to like try and help predict the end of a wave 2, because to put it bluntly, after the market heats up, it needs to cool off a bit before it can, you know, continue with the next leg up. But what's interesting here, right? The 38.2 level sign the date for a potential end of wave 2. So far it's actually lived up to you know, what's been presented. Granted, you know, GameStop is hugely algorithmically driven, so, you know, take it with a grain of salt, but so far the lowest we've hit was like right here. And so if we continue to push on upwards, that's, you know, another confirming indicator. If not, the next date that comes out is, you know, 7/14. Everyone is excited for that date. So I can see the argument. It's very hard to deny that GameStop is not bullish. Let's remove all this. Yeah, no, that's that pretty much covers like where we're at. What I'm like really looking for from here, this is a really hard position to be analyzing from on such a small time frame, because ideally I have like a bit more movement to like determine what's going on here. Basically all I'm looking for the trend to remain valid is higher lows relative to 177. So like, let's say market opens and we come down to like, actually, let me put that back. Let's say market opens and we come down to like, I don't know, let's say like 183 or 180. That's totally fine. That just validates like a really small wave 1 and 2 on like a day-to-day scale. You know, doesn't really matter, but higher highs and higher lows, definition of an uptrend. Look for that. Yeah, I guess real quick before I end this, let's remove these fib levels and let's just look like visually what's going on, like what the fuck is happening. What view is this? Oh, that's a lot. Yeah, let's just look from here, right? So this is the channel that we're actually traveling inside of right now. What I would like to see, assuming that we're back in a bullish trend, is for us to break out of this channel right here. And so resistance comes out to like 209, 210-ish. So if you're watching the ticker, expect that to act as a level of resistance before we break through, because you can see like historically we haven't broken out at all. We've like tested the upper bound a few times, but haven't quite broken out yet. And so ideally we would see a good amount of volume, but again, you know, most of the volume is suppressed through dark pools. So that part's like, you know, hopefully we see it, but we're not really in control of what happens there. But yeah, no, I'm just watching for the price to break out of this channel, you know, upwards and onwards. But okay, so I really hope you guys did enjoy the analysis. Didn't even go too deep, if I'm being honest with you. I'm just analyzing like the bigger movements, just because I feel like the smaller ones, obviously they constitute the bigger move, but like it's not really worth beating yourself up over analyzing all that, especially if you're not trading it. And I don't know about you guys, but I don't trade GameStop. I invest in GameStop. Other tickers I do, but you know, I have like a rule with GameStop. If I buy shares, I will not sell the shares until they're squeezed. Doesn't matter what price I bought them at. I probably loaded like half my position at like $260 back in March. But granted, that's because I bought calls at 40 and sold them at 300. But I just wanted to buy more shares at that price, so I didn't really care. But you know, it happens. The moon tickets are cheap right now. Get them while you can. None of what you heard in this video constitutes financial advice. I'm not a financial advisor. Yeah, I'm gonna shut up. If you guys enjoyed this, please let me know. Leave a thumbs up. I'm happy to do more of this type of analysis. Maybe like once a week before the market opens, just going over what I expect. But yeah, sick. If you guys stuck again in this video, you're awesome. I really appreciate it. Don't forget to like, share, subscribe if you're new. And as always, thanks for watching. We'll see you guys in the next video. Peace.